Okay, let's bring in our technical experts. Index is at 11,408. We're joined by Manav Chopra of Indiabulls Ventures, and also joining us on the show is Richard Jain of Angel Broking. Good afternoon to both of you gentlemen, and thanks a lot for joining us. Richard, let me come to you first. At 11,400, would you take a fresh trade on the short side on Nifty?
Yeah, hi, very good afternoon everyone. Yesterday we have seen that the crucial support of 11,550 was breached in the index. And post that, we have seen a good follow-up selling move today also. If you look at some of the options data, and yesterday till afternoon 11,500 has the put option had the highest concentration, so which indicated that 11,500 was a support. But once that support of 11,550, 500 was breached, we saw some good unwinding happening in 11,600 as well as 11,500 put options. And in fact, if we see today's trading session, then 11,600 call option now has attracted very highest open interest. In fact, even 11,500 have been witnessing writing at high levels. So this clearly indicates that the near-term momentum after breaching the support of 11,550 is still negative, and we believe that this negative momentum would continue towards its next support levels of 11,370, which is the 38.2% retracement of the entire up move that we have seen since March, and even 11,310 could be tested, which is the 89 EMA on the daily chart. So as of now, trend remains negative, but if you ask whether a fresh trade should be taken over here, now if we see 11,550 was the support, and we are already about 150 points lower from those levels. So you won't find a good risk reward ratio or a good stop loss to go short at current levels. So we are advising our clients to stay light on positions at current levels. If any existing short positions are there, then they could continue to hold on for targets around 11,310.
Okay. Well, 11,310, that's the call that is coming in on the index. If that is indeed the index view, Richard, what about specific stocks?
We have sell ideas on stock specific front as well. One of the idea that we have recommended is to go short on Cadila Healthcare. If we see, the stock has breached its previous support today and is now trading at 52-week low. The volumes on the sell-off are also good. This is an indication that the corrective mode could continue in short term. So at current levels also, keeping a stop loss about 300, one can go short for near-term target around 265.
Manav Chopra of Indiabulls with us as well. Manav, good afternoon, good having you. What's the index strategy that you have? We are already at about 11,400. Is the risk reward in favor of somebody going short right now?
Yes, it is. In fact, the markets, after a breakdown from its consolidation pattern, today we see the breakdown has accompanied by a falling gap, and Neeraj, such formation usually indicates that the momentum on the downside would continue. Keeping that note, after a long time, the momentum indicators have also given a negative crossover. So in short, I expect at least for next week or so, markets could remain choppy with a negative bias. You could see some more legs on the downside. On the immediate basis, one can maintain a stop loss close to 11,500 on the upside, and we expect lower targets of 11,250 to be achieved. So the risk reward ratio is still quite favorable. I sense at least a mean reversion towards 11,200 could be quite possible. On the medium term, long term perspective, the trend still remains bullish. So keeping that note also in place, so 11,100 could be a sweet spot for any positional or a swing traders to get into the market. So at the moment, be very selective on long positions, but there would be some momentum at least on the short side.
What about specific stocks, Manav?
Yes, I have my first call, which is a sell on SUNPHARMA. Basically, the stock, after a good sideways momentum, has seen a breakdown below both its long-term averages, and importantly, the breakdown has also accompanied by above average volumes. If you are looking also on the weekly charts, it's trading below its important weekly support zone. So I sense at least in the near term, the stock will continue to witness selling pressure. Overall, this has been an underperformer within the pharma space, and a stop loss of 450 for SUNPHARMA on the upside for lower targets of 420. The other call would be a buy on PVR. Basically, the stock has been in a very good strong momentum, and we haven't seen any brief correction into the stock, which has actually been bought in the past instances. The stock has recently declined from a peak of 1820 and at the support near of 1750 levels. So a good risk reward strategy in such markets, and we've often seen PVR being a relative outperformer for Nifty in such scenarios. So keeping that into picture, 1730 would be a stop loss for PVR on the lower side and for an upside target of 1825.
Okay. Those are some stock ideas there, PVR being one, though Inox is the one that's was doing relatively well in trade today, ahead of their numbers. Inox is up about 1.5% right now, 308. What's not doing well is yet again Zee, and we've spoken a whole lot about this stock and how the movement has been for this one. Volumes have been much higher than yesterday as well. So in yesterday's session, we had a number somewhere closer to about 17 or 18 or even 20 million. Today it's about 53 million in terms of the volume. For Zee at 340, Manav, what would you do?
Actually, the stock has already seen a very sharp decline from its recent highs. It clearly indicates the formation. There has been a lot of aggressive selling positions or long unwinding which has taken place. I don't see any respite for this stock even going forward. So, only aggressive traders can look to initiate long positions, short positions, but it has to happen near the levels of 355, 365 near the resistance zone. And anyone who's still holding on to its short position, those lucky traders, I sense, on the lower side, this formation is likely to see further declines. Will not be surprised to see the stock retest the lows of 300. So any short-term recovery should be actually looked into for initiating long position. Maintaining a positional stop loss of 360 on the upside for the shorts could be the ideal strategy for Zee Entertainment.
I forgot the analyst who gave us a recommendation on
Adrian Mendonca.
I think it was a call yesterday morning where he said he would be going short.
Worked out well. Let's wait and watch what happens during the course of the next few days in Zee Entertainment. Okay, the next story that we're tracking is Siemens. The shares are trading with declines after its parent Siemens AG approved the spin-off of its gas and power business into a separate entity. Why would that be the case? Darshan Mehta is here with the details. Darshan, what is the concern of the investors here?
Yeah, so basically, it's not the first time that Siemens has done this. There were a couple of times in the past also, when Siemens did some bit of restructuring in the Indian business also, and which did not go well with the minority shareholders. To just give you a perspective on what happened is that overnight, the parent company of Siemens decided to demerge the entire gas and power business of the company. That will be spun off into a separate unit and listed in 2020. And they're looking at gas and power, which is they're looking at the industrial business as a whole, which is a high margin business, rather than the power and gas business, which probably is a low margin business at this point of time. How does this affect the Indian business? First of all, it's a big business. So 45% of India's revenues will be impacted because of Phillip Capital, because sizable chunk comes in from the oil and gas business. Now, oil and gas by the power and gas division. Now, the power and gas division is part of the energy management segment, which accounts for 52% of the FY18 revenues and 56% of the FY18 EBIT. So it's a sizable chunk, and if this gets taken out, investors are worried. Now, Siemens India is saying that they are reviewing the impact and they will evaluate on the further course of action. And at this point of time, they are working on what they're doing. They don't have any clue because it's a decision taken by the parent. But really, the problem is if it's a mirror listing, there's no problem. But if you saw what they did earlier with the healthcare business, or with the mining technology business earlier also, investors were given a bad deal because it was basically that was done something that aided the parent company, not the Indian minority shareholders. So that seems to be the worry. There's no clarity on how they will go about with it, but concerns still remain whether the minority shareholders will get a fair deal in this or no.
Still a decently tracked stock here, Siemens Limited. I think if we get, Darshan, thanks for that. We should get the ANR of Siemens to see, what exactly could be the price target for the stock here in India. There is still a return potential of about 5.3 odd %. 40% of analysts recommending a buy on Siemens India, following 35% who say hold on to the counter. Very few sell calls, just about 5 sell calls coming in the counter.
Just before we get to Sanjeev Bhasin, just want to mention Chennai Petro. The results came out. The stock is down about a couple of percentage points. They've slipped into a net loss versus a profit in the corresponding quarter last year. So just some bit of pullback there. But getting our fundamental voice on the show, Sanjeev Bhasin of IFL with us on the show. Sanjeev, good having you. It's been a while. Thanks so much for taking the time out. How are you assessing the weakness in the markets currently? Overdone? And would we see a bounce? Are you telling that to your clients, or would you believe that the nervousness would stay and therefore best to sit on the sidelines?
We've come a long way from 10,500 to 11,850, and in the month of May, the general adage is sell in May and go away. Donald Trump has added to the volatility with his tweets, and a much needed correction in global equity markets, which were running unfettered, has put a roadblock. India is part of it, but now the cause and effect. The talk when I heard 11,800 was that BJP is coming back with a majority, and at 11,400 now BJP is not coming with a majority. So aside from that, I think numbers on the broader market have been much better than expected, if you leave aside consumption and some of the discretionaries. But I think the earnings are going to turn around. We think macros are in your favor in the shape of rupee, bond yields, and inflation. So I see no reason for despondency if you have a slightly longer term view. This was a correction which was needed after a very, very strong rally, and we think that we are looking at the next 6 months rather than the next 16 days, which could be volatile because of the elephant in the room being the election. Globally, I think equities as an outperformance will continue. You've seen gold, real estate and bonds do nothing. In fact, bond yields are at the lowest in the US 10-year yield also, which indicate cheap money is going to be there in abundance. But the volatility is definitely a little bit unsettling.
Hi Sanjeev, good afternoon to you. Let's chat then stock specific. We had SEAT coming out with the numbers. Of course, operationally it was expected to be a weak quarter. We've seen the stock on year-to-date basis, it has underperformed. But after the earnings, I think on sequential basis, there was some bit of improvement still. If you track this space, what did you make of the numbers and what would you advise now on SEAT?
Correct. So, SEAT has been a part of the OEM on the autos, which has been the arguably the worst performing sector in the last 2 quarters. And understandably so, after a 5-year run, we are aware that Ola and Uber and the problem of insurance and the NBFC fiasco has really hit the underbelly. But this is a long-term wealth creator. The prices are in your favor because the brands have become extremely more lucrative on the sell side. But like we are thinking that consumption after this election will undergo a sea change, given that capex both from the government side and on the private side can see a much needed shift. So commercial vehicles is where definitely we see an uptick. We also think the autos, particularly if you hear the commentary from some of the select players, they think the SUV market and others will be starting to improve maybe in the June quarter. So SEAT and Apollo Tyre would be good buys if you have a slightly longer view. But like I said, we want to play the OEM cycle more on select players. So Exide, Apollo Tyre and at this price, Motherson Sumi would fit the bill if you want to play slightly longer term on the autos.
The pure play autos, Sanjeev, I mean, the question marks around whether or not this pain is going to last for a few quarters more, whether it be passenger vehicles, whether it be trucks, all of them put together, two-wheelers. How would you read into this?
Yes, so we are aware, you've heard the numbers, you've seen the monthly sales. But there is a price point which is very effective, and I like to buy fear when underlying everyone is pessimistic. And I can see select autos because of the brand, the sheer value of the franchise doing extremely well, maybe a quarter or two down the line. So in that, if I could name three players, it would be Ashok Leyland, Eicher and Bajaj Auto in their respective places. Ashok Leyland purely because it's gained market share in the LCV, MHV, Their new launch on the ICV, that's the intermediate commercial vehicle, has done exceedingly well. They are gaining more market share in the bus market. Their new launches in CIS countries is again going to be a icing on the cake. And the valuation from 170, the stock is at 85. So I think this is a very, very good level to enter Ashok Leyland. Eicher Motors purely on the back that Siddharth Lal has created a franchise which is pan-India, and the youth aspirations on motorcycle is an ever rising uptide, and I think that should see it in good times in the next few quarters. Bajaj Auto purely on the back that they sacrifice margins to gain market share, which has played out well, and now margins from the management seem to be back on track. Their subcontinent business is also going to be another adder in the next few months. So it would be these three names in that pecking order. If you are a value picker, then Maruti may have priced in the worst at 6,500. You could do a SIP or purely buy some mutual funds which are more auto-centric.
Okay, I think the markets are at fresh lows, at least for the day. Nifty is now 11,000 below that mark, and for both Banknifty and Nifty, we've reached that 50 DMA which we were highlighting. Banknifty slipped below the mark of 29,000 now, so the selling pressure is only intensifying. Pull up the intraday chart of Rain Industries. A while back, the numbers had come. Profits were down 72%, revenues were down 3%. The margins came in at 11, but after the numbers, the stock slipped into the red. But from that lower level, once again, there's some buying emerging for that counter, and currently is sitting with gains of nearly 5.5%. Manav, if I could come to you on the index now, what should be the strategy? We're at day's low, 11,380.
See, I just mentioned some time back, in spite of such kind of downslide, the risk reward was still favorable for the bears, and we expect that the current scenario and the kind of the breadth the market has, I sense 11,200 could be the targets that one can look out for. So someone who has taken the trade, possibly can also maintain a trail stop loss near the day's high. So, it acts as a more or less like a protective stop loss. But looking at the current scenario, I sense we could see a negative weekly closing for this week, which could also be quite bearish for the markets, at least for the near term. So one should maintain positions mainly on the short side going forward.
Okay, got that. The markets continue to slide at this point. But remember, our conversations earlier on in the day with Gautam Shah of GM Financial suggested that, he's of the opinion that around these levels of about 11,400 odd is the time that he'll start looking to buy into the markets. Zee continues to grind lower and now sub 340. That's 339 right now. Not at the intraday low. It had gone lower than this, but still a heavy cut of about 8.5%. Sanjeev Bhasin, what will you do with the Reliance Industries now that breaks 1,300? It's just about very close to, nudging 1,300 on the downside. Last 3 or 4 trading sessions have not been particularly kind for Reliance Industries, and being the heavyweight that it is on the index, it's pulling the index lower with itself.
Well, there has been 3-4 days of basket selling by select foreign institutions, and I think ICICI, HDFC Bank and Reliance have been the stocks which have seen maximum unwinding. I think Reliance now at these prices is fairly priced at least for a 10% upside by the year end. So if you have been waiting to buy Reliance, we still think 1,550 to 1,600 by the end of this year should be on the cards. It has been a bellwether in the shape that Jio has garnered market share, and their GRMs which were lower, we think could start to see an uptick given that they were 10 days lost because of inventory regulation and closure of the plant. I think Reliance now at these prices seems very fine. And like I said, I think this 11,350, 400 is a zone where I don't see the market going lower. If it does, it could be momentarily. We think these are very, very good opportune times. And, Devina, the broader market is looking extremely lucrative given that it has been underperforming, and we think that once we are past the elections, the second half could actually belong to the broader market. So be selective, try and look out for some of the select themes. We'll name a few themes which we are extremely bullish given the results and given the macros. So we would play those themes and stocks related to them.
Vodafone Idea, now that we've seen post rights issue, the shares hitting the market, what would you do at a price point of about 14.5? Manav Chopra?
Actually, the prices have been in a it's been in a downtrend. We have often seen recently any bounce back into the stock has actually been sold into at higher levels. I think this trend will continue going forward. The overall momentum for the stock has been very weak, so I've not seen any follow-up buying coming to the stock. In fact, it has been trading below its 20 DMA since past 6 odd months. So it clearly indicates that this is a stock where one should not initiate any long positions, and I strongly recommend one should not go for any sort of a bottom fishing into stock like Idea. So it's completely an avoid at the current levels, and in case if there is also a bounce, ideally one should look to exit, but don't enter into long positions into this.
Okay, pull up the chart of Zee. I think the stock's fallen once again. It did recover from the day's low, but I think it's seeing more selling pressure at higher levels, down 8% in trade. Sanjeev, before we thank you, any views on this counter? Management has given clarification that they are at advanced stages with regard to stake sale, but a lot of rumors also in the market. But if somebody is holding the stock in the portfolio, a lot of the experts are saying that fundamentally nothing's wrong with the company, but it is the stake sale, I guess, which is in focus. What should one do? The stock's now around the levels of 330.
Very painful question, and this is telling you that these errant promoters have actually been the real bane of Indian corporates, and whether it's ADAG or Yes Bank or select over leveraged players, Zee has been taken the cake. And I think that till I don't see money on the table, I'd rather not buy it. I'd buy it more expensive, but let the value be created. I would rather shift into a Suntv, which I see gaining market share because of the regional languages and some of the effects of this election verdict, which could play out very well for media ARPUs. On the other hand, if you do want to play media, then some of the data producers, particularly Reliance and Bharti, they would offer a better entry point. Zee for me would be an avoid.
Okay. Sanjeev, we'll leave it at that. Thank you so very much for joining us this afternoon with your thoughts. That's Sanjeev Bhasin there with his opinion on the markets. Time now to take a very short break, but before we do that, Jyoti Laboratories has posted a mixed quarter in line with subdued performance of several peers in the FMCG space. To know more about the extent to which the slowdown has an impact on the earnings, Agam Vakil had a chat with the Joint Managing Director, Mr. Ullas Kamath. Listen into that conversation.
In fact, the current quarter, but for household insecticides, we have done fairly well. It's about 9.3% top line growth, and the healthy EBITDA margins, what we have got for the current quarter is 16.4. And overall, if you see the market sentiments in the rural India is not as good as what we expected. However, the smaller SKUs are doing very well for us at the marketplace, especially in rural India. So with that, we are able to deliver whatever the numbers, like more or less both on the top line and EBITDA margin. However, it could have been much better if household insecticides has taken off, and also if the rural has taken off. Generally it takes off in our case 1 to 1.4 times when compared to urban. If it had done, then probably will have gone up to 11 or 12% top line growth.
Okay, all right, sir. So since you have mentioned a little bit of a slowdown in rural growth, and that is the case in case of a lot of your peers too, what is your reading on ground, and is there any point at which you can expect some recovery when it comes to rural growth?
In fact, rural growth, in my experience of decades being in this business, it is always depend on three things. One is on the rain, the second one is on agriculture produce and the recovery price for that, and the third one is the government spend on social sector. And in the current year, some of it were not in time, and even though the direct transfer happened, to what extent has gone to the extent of the consumers where we are supplying the products, we are seeing the traction now. But overall in the current year, we had a mixed trend coming from the various states. Some states have done very well in rural India, some states have not done that well, and some of where rainfall has not been good, they didn't have much money to buy like FMCG product. Having said that, in the current year, I'm very hopeful that now that monsoon is going to be almost normal, and direct transfers of the government is happening very effectively, and also the government spending on the social sector and creation of some jobs should help us to go back to double-digit growth in the rural sector as well.
Mr. Kamath, we are also seeing a little bit of pressure when it comes to gross margins. What are your observations when it comes to input costs now at this point in time?
In fact, input cost is not a worry for us because post GST, most of the benefits will go to the consumer. At the same time, any input cost will be passed on to the consumer. And at Jyoti, we don't have any worries on input cost as such because it always be passed on. In the current quarter, if you see about 200 bips reduction in the gross margin is mainly because of the consumer offers we ran with a 2+1 offer, 40% extra, 20% extra. All of them have gone as cost of goods sold. To that extent, the sales promotion has gone through our cost of goods sold. That's why you see that 200 bips reduction in the gross margin. Otherwise, we are a healthy gross margin at about 48%, and we'll continue to maintain that 48-49% in the years to come also. But no pressure on input cost at this point in time for Jyoti.
Fair enough, sir. So your biggest segment, that's fabric care. Again, we're seeing a near 4% growth here as well in terms of segments. What's the outlook that you can provide us with, considering this one is a critical one when it comes to growth?
For us, the real growth driver is the dishwash segment, which is about 32% of our business, and both Pril and EXO, the two brand strategy, is doing very well for us. We are number 2 now in the country in the dishwash segment. And also, if you see the last 5 years, our CAGR has been upward of 20% in the case of EXO and Pril. So that's our star performer, healthy EBITDA numbers there, and growth has also been very good, and we're garnering the market share. Coming back to fabric care, and fabric care, Ujala has been a dominant player as always, upward of 80% market share, a healthy gross margin of upward of 70%. That's doing well. But whereas the other fabric care detergents in the last quarter or maybe about 5 months, most of us we are running a huge consumer offer up to 2+1 in matic version and 30%, 40% extra weightage in the regular detergent powder. To that extent, the volumes have gone up. Value-wise, you see a little depression, but the 4% growth overall in fabric care should be about 8-9% in the coming quarters.
Okay, and a final question, sir. So you did allude to the household insecticides briefly, and we've seen some weakness in case of your peers too. My question is, to what extent does the weakness have to do with seasonality, considering we did see a delay of the summer onset and also a prolonged winter? Does seasonality have anything to do with the demand here?
Yeah, in fact, it's only the seasonality which used to affect us in the past. Like the rainfall is on the right time and winter sets in quickly, and delayed summer. All these things will have been a positive trend. However, for household insecticides, the mosquitoes, they're the only thing, and it used to be a positive trend in the past, and only negative will have been the seasonality. Having said that, a couple of quarters we have seen spurious material, which is unethical chemical composition agarbattis had come as a proxy to mosquito coil, and that has become now almost 550-600 crore of a business, which is growing in the last 3 years, but now it has come to a standstill, and I see degrowth in that category as such. To that extent, it's good news for organized players in HI business, and hopefully that business should come to us because we have launched our own 100% natural variant in household insecticides in the form of incense sticks, and that business which is readily available, we should be able to get that business over a period of time. To that extent, there is no worries, but for us 12 to 13% of our business comes from household insecticides, so well protected.
Welcome back. You're still watching Countdown with us, and 25 minutes to go for markets to close, and the weakness, by the way, continues. We're almost once again at the lowest point of the day. Nifty is down 122 points, and for the week now, by the way, we're down almost 3.5%. Banknifty is trading around the mark of, I think, a mild bit of recovery because it did breach the mark of 29,000, but still it's sitting with cuts of 270 points. A lot of individual stock reactions also seen. Chennai Petro just came out with the numbers a while back. I was just checking the data. There's a lot of short build up which has come in. Open interest has surged quite significantly for this counter just after the numbers came in, and the stock's down almost 2% in trade. Other than that, you've got Voltas, which is in focus. The numbers come out tomorrow, but net there are certain stocks, I think, from the small cap arena which are doing well. Something like Shimaru, that's gone up 8%. On Mobile has seen gains of almost 6% in trade, and Panama Petro, that's the other stock which has seen gains of almost 5% right now. But Which are the Fab 4 stocks of the day? Let's head across to Sharad Dubey to find out. Hi Sharad, good afternoon.
Hi. So the first stock we have picked up is Newgen Chemicals, which is up by almost 23% today. Now if you see, the stock is in the upper circuit, and today it was listed in the bourses, and the listing price was at around 251 odd rupees, and also it was around 17% gains for the premium to the issue price. The second stock we have picked up for for Fab 4 is Dhanlakshmi Bank, which is up by almost 1.5% as the asset quality has improved, and also the provisioning norms have improved, and which is the provisions stood at around 16 odd crore rupees versus 80 crores on a year-on-year basis. The next stock we see is Embassy REIT WAC, which is up almost 3.5% after JP Morgan came out with a report stating that there's going to be a 6% dividend increase in terms of earnings going into FY 2023. However, in their report they maintained there will be an overweight with a target price of around 300 odd rupees. The last stock for the Fab 4 is Kajaria Ceramics, which is up by almost 1.37%. This is based on a high open interest build-up which has been seen, and also the volumes are trading twice its 20-day moving average.
All right, thanks a lot for that, Sharad. So those are the Fab 4 stocks of the day. Newgen Chemicals, remember, the new listing for today, trading at a 22% premium to the issue price of about 215 rupees per share. This is pretty much in line with what Polycab did on the day of its listing. I think Polycab was an issue price of about 538, listed closer to 620, went all the way up until 665. And actually is not doing all that badly for a very skittish market that we are in. So it's actually holding pretty steady, and not losing, not gaining. It's just about holding its post. About 645 for Polycab India. Siddharth Sidani of Anand Rathi is joining us in the show. Siddharth, good afternoon to you. A quick comment from you on what we're witnessing right now over the last few days, and how would you position yourself?
Good afternoon. Overall, there is volatility in the markets on the back of global as well as domestic markets. Global markets, as we know, that the indication of trade war again has popped up, so that is also one of the reasons. Slowing down of the economies, global economies, also one of the reason of the volatility. But most of the things would be attributed to the domestic side of the business, where we have seen that election results coming up on 23rd of May. That's creating a little bit of a volatility in the market, and that was very much known that in such a situation the volatility will be also high. If you look at the VIX volatility index is also at the high point of the time. Having said that, right now one has to keep a wait and watch kind of a situation. If you really want to go out for shopping, it has to be very selective in nature. Unless you wait out for some more days, let the volatility go away, and very selective few stocks from few sectors can be picked up at the current levels. Apart from that, wait and watch would be the strategy in the market.
All right, Siddharth, just stay on with us. We'll come back to discussing many more stocks with you. But onto the chart of the day. Indian government's thrust on the use of cleaner fuel and cut down on pollutants may have had an impact on India's import bill. The latest numbers for the last financial year shows released by Petroleum Planning and Analysis Cell shows that the growth rate has actually moderated. Samit Sarkar, he's here to take us through all of this detail. Samit.
So if you see in FY19, India's fuel demand rose the slowest in the last 5 years, and that is because the government of India promoted usage of cleaner fuels in FY19. Now the government had banned usage of pet coke due to rising pollution levels and pushed for use of cleaner LPG for cooking instead of kerosene. Now because of these two moves, the pet coke and kerosene consumption declined by nearly 20% and 10% respectively compared to last year. And because of this, the total fuel consumption in India rose by only 2.66% in FY19, which is the lowest since FY14. Now if you see for diesel, for consumption of retail fuels like petrol and diesel, now they remain largely unchanged because it grew compared to last year, however at a smaller rate in FY19. Now if you see petrol and diesel consumption, they increased by nearly 8% and 3% compared to last year.
Okay, Samit, thanks a lot for bringing that chart of the day. Just want to pull up Bandhan Bank. That stock's fallen in the last 5 to 10 minutes of trading, currently sitting with cuts of almost 3.5%. Ruchit, on the charts with the current fall, what do you make of it? Would you take any position here?
I think the broader trend continues to remain positive, as recently we have seen a higher top, higher bottom structure formation. But most of the names from the banking space have been witnessing this corrective move since last 2-3 days. If we look at some of the support levels of Bandhan Bank in this correction, they are coming around 545 levels. So some more dip could be seen in next few trading session. It's a buy on dip counter. So whenever it comes near the support of 540 to 545, one should use that as a buying opportunity.
Okay, that's Bandhan Bank down almost 3% in trade. Also Cox & Kings, by the way, that's down 7.5%. That's touched its 52-week low in today's trading session. Eveready has been locked in lower circuit, I guess. And a lot of other stocks which have seen big moves coming about. Zee, we've already highlighted. Pull up Reliance Capital, that's down almost 5%. I guess the fall has just come in the last half an hour or so. Reliance Capital, not exactly, but it did recover from the day's low, currently sitting with cuts of almost 5% in trade. Suntv is the other one. I think since morning this counter has been weak. Manav, would you take a bet here at 530 levels for Suntv?
Yes, in fact, looking at the overall formation, the stock is a very good STBT kind of a scenario whereby it has breached its previous support levels. The breakdown has accompanied by good amount of volumes. It's trading below its short-term averages, and most importantly, the prices are also forming a bearish formation on the intraday chart. So, on the immediate basis, one can maintain a stop loss of 536 on the upside and can expect lower targets of 515.
All right, those are some quick technical calls coming in there. But since we're talking about technicals, we had a very important voice in the morning, Gautam Shah of JM Financial. He spoke about the long-term outlook for India and he said it remains positive. But how will the unraveling happen over the short term? That's the question. Earlier on, we spoke to him on how traders are positioning themselves with the markets being at the levels that they are. Hear him out.
I'm sure it's going to be a sharp and swift move. I was just discussing this with a number of analysts yesterday, that in the past when the market was so light and so on speculative positions and heavy on hedge positions, how has it played out? Typically this is more positive than negative, because I think people are extremely fearful. Margins on the exchanges have gone up quite a bit, and therefore that's anyway not allowing a lot of participants to get in a big way. And given the kind of premiums that you have right now, I think people are very jittery about taking positions. So as I said, since the market is a lot more prepared for a negative eventuality, or a possible negative eventuality in the next 2.5 weeks, I think this market will find a floor very easily, and that's probably the reason I don't see much decline. Let me add to this, global markets have had a phenomenal run themselves in the last 1.5 months. If you look at most markets, they have gained about 20% from their recent lows, and they were ripe for a pullback. The pullback came thanks to the excuse from the tweet from the president. But I think even the global market pullback should settle down in a few days. That's what the charts are suggesting. And if that happens, I think India can get back on track very easily. The only negative, as I see right now, is the market breadth. Because while the Nifty might still be at 11.5, I think the kind of damage that we've seen across the board is quite discouraging. But I'm sure that this disconnect between the large caps and the mid caps will gradually get settled, possibly around the election results time.
While this is about the index, and you just highlighted that the broader market space, the damage is far more concentrated than what we've seen for the index itself. That's where the crux of it lies, because it's the individual stocks that a regular person takes a position in. How would one approach individual counters that are seeing the kind of sell-off that they have in the recent past? And it's not just sector-specific, like consumption, where all of the stocks have started to move lower, or cement as a pocket, where most of the stocks have started to move higher. So, you have to be very picky and choosy.
Well, there are 2 points here. Number one, you don't catch a falling knife. I think we've seen that in the last many months, and particularly in 2018, when the best of names with the best of fundamentals in the mid-cap space lost 40, 50, 60% just like that. So that cannot be a basis to go long. I think the price action needs to show some strength, which has been missing in the mid-cap space. But also let's realize that the mid-cap index rallied from 16,000 all the way to 18,500, which is a good 2,500 point rise in the last couple of months. And that rise, I think, is just getting digested, and around the 17,000 mark on the mid-cap index, I think you will have the bulls coming in once again. But as I just highlighted, there is so much pessimism suddenly in just 2 trading sessions that the market is just getting lighter and lighter by the day, and it will only help it create a much stronger foundation once the next leg up starts. And I'm very clear looking at the medium term charts that the mid cap index will rebound from here. In fact, we have a target of about 20,000, 20,500 on the mid cap 100 index, possibly in the next 1 year. So that's a good 30%, 35% to play for. And I think the SIP money angle, the fact that 9,000 crores is coming into the system every month, I think that's chasing the top 20 stocks. And that's probably the reason the top 20, 30 stocks have been very, very steady. And every time there is a smallish decline, they find a lot of support. I think that's the only real explanation that one can have right now.
All right. I just want to pull up what's been happening to Maruti, Gautam, and this is a stock that is difficult to understand with the kind of moves that it has been making. I mean, fundamentally, whatever has been happening to the auto pocket as a whole, individual stocks within the auto pocket deserve attention, and Maruti is the only one that's been, in terms of the volatility that the stock price has seen, the highs that it has made compared to the lows which it's trading at right now. How does one approach this?
Well, clearly, it's been an underperformer. It's a stock that is not moving with the market. It's a stock that goes down every time the market sees a little bit of a dip. And therefore, you don't want to just be brave and be a buyer just because it has fallen 20, 30% from the top. I think Maruti has been a debate in our office as well, between the fundamental and technical analysts. And I'm strongly of the view that while Maruti was a poster boy stock for the last couple of years, giving almost multi-bagger returns for a large cap stock, I think the times have changed, and I think the market needs to realize that the kind of leadership that many of these auto stocks had, I think that's really changed. Probably in the auto space, the only stock that we like is Bajaj Auto. I think it's been one of the steadier names in the marketplace. And in this market, you just want to buy the names that are showing relative strength or which are outperforming. So, the top 5 names in the banking space, some of the capital goods stocks, some of the oil and gas stocks, I think they are the ones, which we are recommending to our clients. Auto remains a complete avoid for us, and Maruti, given what it has done, I think there could be more pain in store in the days and weeks ahead.
All right, Gautam Shah there with his views on Maruti, the auto pack. I think he likes Bajaj Auto more than a Maruti right now. But it's time now to take a look at what dealing rooms are recommending this afternoon. Yatin Mota and Darshan Mehta are here with their channel checks. Darshan, let's start off with you first.
Yeah, so one of the numbers that will come out tomorrow is Voltas. The counter is trading extremely weak. It's down almost 4.5%, and dealers anticipate that Voltas probably will disappoint as far as earnings is concerned. Blue Star, however, came out with a good set of numbers, but the general trend for Voltas probably on the projects business is expected to not do well this time around. The other one is Zee Entertainment. Again, at the day's low, it's down almost 12%. It did manage to recover once the clarification came in from the management, but nevertheless, dealers anticipate that there is ample selling that is there in the counter, and that will probably continue. There is no buying support coming in at lower levels, and that is why they believe that the selling will continue. And the final stock is Reliance Industries. It's gone down almost 6 to 7% in the last 2 or 3 trading session. One of the large FIIs has been active seller in the counter. Some of the smaller FIIs have also been trimming positions in Reliance, down 3%. Probably they believe their selling pressure will continue. But Yatin, what do you have?
Well, Darshan, Apollo Hospitals is one stock which is gaining momentum in trade in a weak market. The stock is holding high. Of course, has come off from the day's high, beg your pardon. So on an overall basis, dealers on the basis of F&O trends are recommending a buy on Apollo Hospitals. Remember, we had the notification on exchanges which said that promoters have reduced the pledge shares substantially, because of which there is some momentum in the counter. Titan, that is also one stock which is almost flat in trade. But dealers do indicate on the kind of feedback that they're getting from domestic funds that a lot of funds are said to be sellers in few of these consumption names, including the likes of Titan. Finally, IndusInd Bank is also one stock wherein dealers do indicate that at lower levels HNIs are buyers in trade. The stock has come off significantly from the recent highs, especially post the quarterly earnings. But dealers do believe that at lower levels, this is one stock to be kept an eye on.
Thanks for that, Yatin and Darshan. By the way, this seems to be a serious risk off because it's one thing to see a Yes Bank and some of the auto names drift lower. It's quite another to see Reliance continuing to correct the way it is. It's quite another scene to see Bajaj Finance as the second worst performer on the index for no other reason than the mood that the market seems to be in. This is not necessarily a Bajaj Finance or a financial names related pullback, but one would believe largely some profit booking happening by funds in pockets where there would be money that they would be making. Bajaj Finserv is down about 3%, 7340 as well, NTPC 2.5%. You can see a lot of those kind of names coming off. And Reliance Industries is a dead giveaway of the market being in a risk-off mode. Nothing quite wrong there. 1298, not expensive on valuations, but certainly pulling back with a bit of a flurry. Zee Entertainment, by the way, as we spoke about, 12% lower, 325. I believe the market would not be in any mood to have any kind of uncertainty with any company right now, which is why if there is a bit of dilly-dally on what can with the company's fortunes in the near term, the market would just want to probably stay away from that. Looking very wobbly right now. Let's get in our technical experts for the closing strategies. Manav Chopra, 142, 11,355 now. What are the levels that you see? You may not want to take an immediate trade right now, but what are the levels that you see on the downside for the benchmark indices?
See, the first lower support on the lower side, like I had mentioned, is 11,200, and the next support that comes, then there are clusters of support, Neeraj, around about 11,100. So any positional traders who wants to initiate some long positions should ideally look around 11,100, but this short-term momentum would see declines of another 150, 200 points on the lower side. So one should expect this drift to continue on the lower side, and most importantly, after a long time we are seeing a weekly close in a single week breakdown, so that is going to act a good selling pressure on the upside. So this decline may not stop on the immediate basis. We could see a consolidation to negative bias, and after a series of decline that we've seen from the highs of 11,800, there could be a 1 or 2 day pause, but eventually the declines would be on the downside. 11,100, 200 would be the levels one can expect on the immediate basis.
Okay. Ruchit, are you taking any trades on any of the large caps? What's your top STBT? I'm presuming you would give an STBT and not a BTST.
Certainly, the kind of momentum is there that from a STBT perspective, I think PFC could be shorted at current levels. We have seen that the stock price have reached its immediate support of 110, and now I think the next support for the stock price is placed around 102, 101. That could be headed in tomorrow's trading session. So at current levels, from a STBT perspective, one can go short on PFC, keeping stop loss above 110, expecting target around 102 tomorrow.
Okay, and Manav, you're giving your closing strategy to us? Your stock-specific closing strategy?
Yes. So I'll mention it on live. So basically, my first call would be a sell on MRPL. Basically, I've seen good sell-off happening in the oil and gas space, and MRPL has been one of the underperformers. The prices have reached its important support level. So on the immediate front, I expect the price, since it has breached its support levels, could see declines towards the levels of 63 on the lower side. One can maintain a stop loss of 68.50. And my second sell would be a sell on Glenmark. There has been a very sharp decline in last 15 minutes into the stock, and it has breached its important support, even though the prices have witnessed over 5% decline on the intraday. But I sense there could be some sharp fall down move in next few sessions. So stop loss of on the upside of 608, and one can expect lower targets of 575.
Okay, that's a sell on Glenmark Pharma. Pull up the chart of Asian Paints. The numbers come out tomorrow. I think the stocks just recovered from the day's low. It did enter into that positive territory, just about flattish, but it's off the lows of the day. Siddharth, do you expect any sort of outperformance from Asian Paints considering the GST rates were lowered last year in July for this industry?
Well, Asian Paint being a leader is a good stock to be in. Looking at the leadership quality and looking at the kind of distribution network it holds, I think these kind of companies are portfolio stocks and not a stock to trade out. However, having said that, crude prices definitely will play a headwind for the company, for its business in terms of inventories are concerned. But I think that would be more short-term driven rather than long-term driven. Although we have achieved our target price in Asian Paints as per our coverage. But having said that, with a long-term perspective, Asian Paint kind of a leaders should be a portfolio stock, maybe with a 1 to 2 year perspective.
Okay. I wonder if Avenue Supermarts has shown any kind of corrective move today. Flipkart has launched its brick and mortar grocery store. Well, Avenue Supermarts has actually inched up with that. Interesting move. Let's wait and watch. Siddharth, take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time. Just a difficult market, so I can appreciate very difficult to comment on what to do with specific pockets as well. But thanks so much for joining in today. Just one quick thought, Ruchit, on Bajaj Finance pulling back. Is there more downside here?
Yes, if we see the recent historical data, then 2950 was a very crucial support for the stock, which has been breached today. And the volumes in last 15-20 minutes post the breach of this 2950 support has increased. So this certainly indicates some negative momentum. I think although on the longer term degree or some medium term degree chart, this would be taken as a pullback move, but this pullback could get extended towards 2820 in next few trading sessions. So at current levels, if we get any minor pullback also again towards that resistance around 2940, 2950, one can create short positions for near term target around 2820.
Okay, Jaman, stay on. We'll take in closing thoughts from you. It's turned out to be an ominous day and pretty similar in terms of percentage cuts to yesterday, but mind you, starkly different in terms of participation today, I would reckon. We'll talk about that in a bit. Down 150 points for the Nifty, the Sensex, Nifty Bank down about 300 odd points, and the broader markets too, my guess is, would have pulled off a cool off and gone down quite substantially in the second half of trade. 1.33%. Actually not quite, but still under pressure for sure. The market breadth would have been adverse today. We'll talk about that in a bit. Let me first focus on the large caps, and you will see heavyweights which have fallen without there being any apparent reason. A bit of a risk-off mode here. The gainers, hardly anything to talk about. So let's bring the camera lower. Save for Titan, which is marginally higher ahead of the results, and Asian Paints marginally higher maybe. Not too many winners worth talking about. The losers, Zee Entertainment, 4%, and then a 10% cut today despite management clarifications. Reliance Industries, another 3% cut. Bajaj Finance, 3.5% cut. Globally exposed stocks, Bajaj Auto, Tata Motors, both of them have corrected today 3%. Mahindra and Mahindra, so autos have taken it to the chin as well. And banks are not spared either. It's not just Bajaj Finance, which is in the financial space, but IndusInd Bank, Yes Bank, State Bank of India are amongst the other stocks that have corrected quite strongly today. I wouldn't be surprised if the volumes would have picked up and crossed the 33,000 crore mark quite effectively. I'm sure Devina and Navneet will speak about that. But Navneet, while the large caps have shown serious cuts for no apparent reason and heavyweights have fallen, I'm guessing the scene is not too different at the broader end of the spectrum.
That's absolutely right, Neeraj. In fact, the selling pressure continues even in the broader markets. The market breadth has been pretty weak. So let me take you first through a couple of gainers, at least in today's session. Topping my list is CG Power. The stock was up. Remember, yesterday, Yes Bank acquired stake after invoking the pledge. So the stock's closing off the day's high with gains of nearly 5%. The other one is Canfin Homes that went up in today's session. If you look at the intraday chart, it did open just with mild bit of gains, but it picked up in the afternoon session. But once again, the gains were limited only with 2% there. C8 was the other one which came out with the numbers. Operationally on year-on-year basis, the numbers were weak, but this stock has been underperforming. It's down 20%. A lot of technical analysts now suggesting it's bottomed out. So the reaction actually to the earnings was positive, 2% higher. Shimaru from the small cap space saw some bit of buying momentum in this weak market. So that was up almost 4%, but towards the end, that also gave off a bit of its its gain. New kid on the block, Neogen had a good listing in a weak market like today, so kudos to that. Neogen saw the price was 215 and the stock saw gains of nearly 20 to 25%. Let me take you through a couple of losers now. A lot of pharma counters were weak, so Cadila Healthcare, that touched 52-week low today. The chart will give you an indication, 4.5% lower at 285. Glenmark was the other one from this pack which fell in today's session. Glenmark closing the day with cuts of 6% and almost at day's low. Bandhan Bank in last half an hour saw some selling pressure. Remember, the earnings for this one was good, 3.5% lower for this. And your usual suspects, Ever Ready locked in lower circuit of 10%. Cox & Kings, that touched 52-week low. Some selling pressure seen for Cox & Kings, lower almost 8% in trade. And also other stocks like BHEL, that was weak. J&K Bank, and from the media pack where you had Dish TV and Zee, but today you also had something like Suntv where selling pressure was seen. Suntv closing around the levels of 526.30 now.
All right, so carrying forward the losses from last week, which was a truncated week, 3 trading sessions, all 3 trading sessions, we actually had marginal cuts. This week started off Monday on a weak note and carrying forward to Wednesday afternoon where we are at right now. Big cut coming. The Nifty now sub 11,400. Just want to quickly pull up while Namit highlighted individual stocks, just to give you a quick snapshot of all the stocks in the mid cap and the small cap space. We'll just quickly get you the MRR for the mid cap 100, which is down 1%. So Edelweiss Financial Services is one of the gainers. Has been losing ground recently, but you've got some buying coming in at lower levels. Ajanta Pharma, Indraprastha Gas. You've got a Union Bank of India, a Syngene, which has moved up about 1%. Amongst the bigger losers, entire real estate as a pocket has looked weak in today's sessions. Oberoi Realty, which was down 6%. Then you've got the likes of Reliance Capital, Glenmark Pharma, Philip Bilcon, all of these names looking very weak.
Okay, let's see how the volatility panned out. Remember, we've given up almost 150 points in trade today, 100 points yesterday, but the VIX was flattish yesterday and even in today's session. It is at elevated level, goes without saying, but in the last 2 days at least, VIX has remained flat. And in terms of participation, let's see how the turnover has panned out. Tomorrow being expiry, it will pick up, but today also it picked up, at least on the future derivative side. NSE F&O turnover about 13.2 lakh crore, and on the NSE cash side, just about the average of 31,000 crore.
All right, and a quick look at the contributors, and then the market breadth picture will come up. These are the contributors. Again, your heavyweights. The picture doesn't change. It's pretty much a replica of what you've seen over the last few days, which is the Reliance, HDFC, and HDFC Bank. Big heavyweights there, dragging the index lower. Components on the gainer side keep moving up and down, but the largest heavyweight there in today's session is the TCS with a marginal 1/4 point contribution coming in there. The advanced decline ratio thereabouts, no points for guessing. By the end of trade, it worsened, was almost 1:4 towards the end of trade. So that's not a healthy sign towards the end of trade as well. That's what you've got in terms of the market close today. Quick opinion from both our technical experts as to how we set up for trade come tomorrow. I'll start off with you, Richard Jain, first.
So I think today, if we see, we had a cap down opening post yesterday's breach of support, and there was a good follow-up selling seen throughout the day. So there is a high probability that this sell-off could continue in tomorrow's session as well. And for tomorrow's trading session, the key levels to watch out would be the range of 11,260 to 11,310. I think maybe in the morning trading itself, we would see this 11,260 to 11,310 getting tested.
Manav Chopra, what about you?
See, if you're looking at the banking index, since it has breached its important weekly support levels, and the breadth of the market overall was very weak, I don't sense there could be any big pullback in the markets. There could be, in fact, series of decline going forward, and the important moving averages which are lying for the Banknifty is around about 28,200 to 28,300. So there is further room of at least 500 to 700 points decline that can be seen in the banking index. So I think some select private banks and the PSU banks will continue to witness those kind of selling pressure, but eventually I think those could be the levels where some medium-term investing should eyed nearby. But I wouldn't recommend jumping the guns and giving buy recommendations at the current levels. One can take a pause for long positions, but eventually can look for some better levels in the near term to buy near the support of 28,200 to 28,500 levels.
All right, gentlemen, we'll leave it at that. Ruchit as well as Manav, appreciate both of you taking out the time and joining us this afternoon.
Thank you.
And on that very somber note for the markets, it's a goodbye from Navneet, Neeraj and myself and the entire team that's put this show together. Thank you so much for watching.